Good afternoon, everyone, and thank you for joining us for today's ICIT Virtual Briefing on the state of the cyber insurance market, the trends, risks, and the impacts of AI. During today's conversation, we'll talk about the cyber insurance market, where it's headed, and what those changes mean for organizations managing real-world risks. For those of you who are new to us, the Institute for Critical Infrastructure Technology, or ICIT, is a nonprofit, nonpartisan 501c3 think tank dedicated to modernizing, securing, and making resilient the critical systems that provide for people's foundational needs. We sit at the intersection of policy, operations, and technology, and we convene conversations like these to turn emerging risks into actionable insights. Cyber insurance has become one of the most strategically important and rapidly evolving components of national cyber resilience. In addition to the current rise in ransomware, nation-state actors are increasingly targeting critical infrastructure, and AI is accelerating both attack capabilities and defensive tools. We'll talk about these shifts and how it's impacting the insurance market. We'll also explore how underwriting and risk models are changing and how policy and regulation are shaping outcomes for critical infrastructure and small and medium-sized businesses and emerging technologies. I'm so pleased to be joined by Sezaneh Seymour, Vice President and Head of Regulatory Risk and Policy at Coalition, a leading cyber insurance and security services provider. Sezaneh has held senior roles across the public and private sectors, including at the White House, the Treasury, and State Department, and she continues to work at the intersection of national security and emerging technology and cyber risk. I had the pleasure of working with Sezaneh when she was at the National Security Council and I was at CISA. And during that time, cyber insurance was one of the initiatives that we were working on because there was a rise in ransomware. And we thought cyber insurance was one of the tools the federal government should be using in its toolkit to help promote and mitigate the rash of ransomware attacks that were going on. So Sezaneh, I'm really excited to have this conversation with you this afternoon. So let's get started. From your vantage point, how would you describe the state of the cyber insurance market right now? And why is it relevant to risk managers in the audience today?
Thank you so much, Val, and thanks for having me. First of all, I'm just smiling because I'm realizing how long ago it was. It wasn't that long ago, but it's been several years since we both were in our last roles. So with respect to cyber insurance, we're in what's currently known as, or referred to as, a soft market, and that's characterized by increased competition among insurers. What that really means is there's just more coverage available, and so buyers will have access to more attractive premiums relative to a harder market. There are really two realities that are driving that. The first is that there's increased capacity. There's just more money that's entered the market, which has put some downward pressure on pricing. And the second is that the insurance market has matured quite significantly, I would say, since the hard market of 2021, 2022, when you and I first started working on these issues together. In that time, you might recall prices in the insurance space rose sharply due to escalating losses. This is peak Colonial Pipeline era. And so the insurance industry's ability to underwrite and manage those digital risks has really matured quite rapidly since that time. But your specific question, or the grain that I want to focus on in your question, is the relevance of the existing market today to risk managers. As I said, we're in a soft market, and it's very reasonable to assume that better pricing market-wide corresponds with a more forgiving risk landscape broadly. That's not really the case here. So the threat environment remains quite intense. Events like ransomware, business email compromise, fraudulent transfers of funds all continue to be significant drivers of losses for businesses. And in parallel, we continue to see that many organizations, especially the small and the mid-sized organizations, really still struggle to implement good security controls. And that's made even more challenging by the quality of the technology that is brought to market today. So in a nutshell, while your premiums today are relatively affordable, your ability to secure a policy and the premium that you will pay for that policy still correlates to your risk. And in any market, whether it's a soft market like today or a hard market, companies that demonstrate common sense controls like MFA, MDR, and so forth will be the ones that get favorable terms consistent with their reduced risk.
Well, that's good to hear about. And one thing I wanted to talk to you a little bit about is is your decision to work at Coalition, because Coalition was a little bit different than some of the insurance companies that we were working with when we were together, working at, me at CISA and you at the White House. And so can you talk a little bit about Coalition's business model and how it's different from a traditional insurance company?
Yeah, and what attracted me to this space is, as you know, we have very few authorities to compel cybersecurity in the United States. We really had to look to market-based approaches, and insurance is really what rises to the top, I think, of the heap in that category. So Coalition is a modern active cyber insurance firm. Like traditional insurers, we provide the financial risk transfer that you associate with insurance, like we step in after an incident to pay claims. But we also make certain security services standard with every one of our policies and at no additional cost. So the easiest way to maybe describe what we do is to walk through what it's like to become a policyholder. Just first off, like one of the first things we do is conduct a digital risk assessment when a business seeks a policy. So we assess your external digital footprint a lot like an attacker would. We look for unlocked digital windows and doors. And then we categorize any of the issues that we find as, critical, high, medium, low priority. And we provide to every business a roadmap for improving their security posture based on our findings. You don't have to have perfect security to get coverage, but we do make coverage contingent on businesses addressing any critical vulnerabilities that we find. And that's because we know that based on our own data that a policyholder with even one critical vulnerability is 3 times as likely to experience a claim in the first year. And then where we look quite different is during the life of the policy. We have a proprietary scanning engine that we are constantly updating with the things that we learn from claims data. We have our own security engineers that we have a number of honeypots. We have threat researchers. So we're continuously scanning and alerting our policyholders to vulnerabilities, new vulnerabilities that meaningfully raise their risk and are relevant to their situation. So we know something about their systems. And the goal here is to help those businesses, many of which for us are small and medium-sized businesses, to cut through the noise of the nonstop alerts and focus on what's most important to meaningfully reducing their risk. And we offer technical assistance to those businesses to help them address any issues that we flag. So again, this is important for us because so many of our policyholders are small and mid-sized businesses, and they may not, frankly, have the capacity to act on alerts without a little bit of help. Just to give you a sense of the scale, because I think this is what really drew me to this industry, just in 2024, we issued more than 85,000 security alerts through our Coalition Control platform. And we helped, just checking my notes here, we helped policyholders mitigate more than 32,000 security issues in 2024. And those range from time-sensitive software patching and zero-day vulnerabilities to maintenance, sunsetting end-of-life software, and so forth. And the last piece is in the event of an event, right, of a cyber incident, I should say, we are 911. Like the cyber insurance industry really is 911 for many of these businesses. We immediately connect them with incident response firms, outside counsel, all the experts that they need to understand and recover. And we pay claims quickly so they can focus on that recovery. So this model that I've just described of active insurance, combining security with financial protection dramatically improves outcomes, and the data supports that. Our policyholders experience 73% fewer claims than the industry average, and that number has improved over time.
That's awesome. Can I ask too, with small and medium-sized businesses, I know when we were working on this together, a lot of them fell out of, it was expensive at the time, right? So they didn't have coverage. And so how are you guys getting the word out that it is more affordable and, to foot stomp some of the things that you've highlighted, how you're improving their security? And these are the types of businesses that are under-resourced, right? And they don't have the cybersecurity expertise. How are you guys getting the message out? Or do you feel like because of just these issues being more out there in traditional media sources, like people do know about it and do know and understand that they need to have cyber insurance? Or I'm just kind of curious how you've seen the market change, especially for those small to medium-sized businesses.
Yeah, no, it's a great question. And so cyber insurance, like in the insurance market, is one of the most rapidly growing kinds of insurance. Mm-hmm. And at one point, a year or two ago, it was projected to double in size every 3 years. But it's still a very small industry relative to like all the property and casualty insurance products. The truth is, it's very hard to get the word out because events like these, just being frankly, a lot of the coverage that you see in the press about digital risk is putting insurance on the radar for policyholders. A lot of regulatory changes are driving businesses to think about their risk. It's not unusual to have businesses come, look for insurance after they experience an incident. But that, I mean, frankly, I think we have to do a little better job of educating and informing. I will say, this is obviously anecdotal, but it's not unusual. There's this myth that cyber insurance is expensive, right? And so, because you hear my LinkedIn feed is.
I've been at conferences where they've said that to each other. Yeah.
And it really depends. I mean, it's the same. It's like talking to a lawyer, right? Well, it depends, like, because basic policies can actually be had for very, very, I think, quite cheap. But it just depends on your business, your risk, like what your policy covers. But basic policies, I think, are quite generous and can be had quite affordably, especially in this, again, it's a soft market where premiums are on balance reasonably low. So it's always a great time, I think, to look into it. But that myth, I think, and educating people about the availability of insurance and what it covers are two of the, not limits, but maybe one of limiting factors of expanding coverage in the small and mid-sized market.
Got it. So, we've seen lately a rise in ransomware again, right? This past year is going to be a record-breaking year again. At the same time, we've seen a proliferation of AI tools across businesses. And so I'm wondering, like, with these two things, I mean, we know on the criminal side of things, the AI tools are enhancing the unfortunately malicious actors' ability, right, to deploy more unfortunately effective tools. And then also on the other, on the defender side of things, they are also using AI in an effective way. But then there's companies that are just inputting these things into their companies, into their software, into their daily practices. And is that impacting their coverage? Like, how is AI both in businesses inputting it into their products, as well as you see this, rise in ransomware? How is that shaping the market and changing, or is it changing the market and changing how insurance providers are thinking about coverage?
Yeah, there are a couple things in that question. I'll start with the ransomware piece and maybe end with AI.
Okay.
The short answer is both the resurgence in ransomware and the increased use of AI are having an impact on our industry and how our industry, prices and measures digital risk.
Yeah.
And I think when I had this conversation just a few moments ago, but we both have national security backgrounds. And for the NatSec community, certain threats become priorities because of their potential to disrupt critical services, right? Ransomware is the obvious one on which we all focus. But in the years since I have moved into the insurance space and stepped away from the national security space, it's forced me to think about digital risk more broadly. And here's what I mean. So for example, while ransomware grabs most of the headlines, and it remains a serious threat, there are other insidious and underestimated threats that business leaders really have to keep on their radar. Our data show that more than half of all cyber insurance claims begin in the inbox. So business email compromise, fraudulent transfers of funds, which I mentioned earlier, they make up nearly 60% of the claims that we see, and they can be exceedingly costly. The FBI has similar stats that show just the scale. So FBI stats indicate that business email compromise incidents that they hear of and are reported outnumber ransomware 7-1. And just to give you, scale, ransomware for us in the same year where business email compromise or email incidents made up about 60% of our claims, ransomware made up just over 21% of our claims. Now ransomware events are some of the most severe in terms of costs. So they are significant events. But it's interesting because if you are a risk manager trying to protect your business generally, like ransomware, big problem, but it's not really the only problem on your radar. And our claims data might suggest that you might experience a different kind of incident first. So that's thing one, and sort of how we think about like the kinds of coverages and how we educate our the business population. With respect to AI, I would say insurers are adapting underwriting practices as more policyholders adopt AI tools. You talked about AI sort of seeping into all sorts of products. You know, there's an increased focus, frankly, on how organizations use and secure AI, especially as there are new risks, right? Like deep fake scans and other kinds of AI facilitated attacks emerge. You could think of data leaks where employees are helping themselves to AI tools that are maybe not sanctioned. And we're seeing insurers really respond in a couple of ways. So it's not early days in this space, but it's interesting because I would say it's a slightly less mature approach to AI in our space, where like many in this space are maybe tightening coverage or adding exclusions related to AI. For Coalition, we've taken a different approach. In fact, we're expanding, or we have just recently expanded our coverage to address new risks, and we have a new deep fake endorsement that we just made available in the last few weeks. So for deep fake related frauds, in general, that's essentially how these two things are affecting our market.
And actually, that made me think a little bit too with the way that Coalition approaches cyber insurance, and then also, you know, cybersecurity in general. Is the threat intelligence that you're sharing, that's you share that broadly across all your customer bases, and like, do you give them monthly updates, or like how are you real time sharing some of the things that you're learning at your company with your customers?
Yeah, so our goal is to make it as easy as possible. So what we have, I mean, we are constantly, every day, we're taking like new net hits in our honeypots. We have all the claims data. The upshot is we will alert our policyholders to the things that meaningfully elevate their risk. We want our policyholders to focus on their business at hand. And for very few of them, that's managing their systems, right? So it's not unusual when there's a 0 day, we will know something about our policyholders and actively reach out to the brokers, reach out to the policyholder, make technical assistance available. So we are ingesting all of this data, figuring out based on our models, like how likely they are to experience an event. And when it rises over a threshold that we think is meaningful enough to distract their attention from from plumbing or running a hospital or whatever that they do, we will reach out to them. So we don't communicate stuff daily. We have those feeds available. There's a Coalition control platform where you can log in and see what we see at any moment in terms of your risk, but we generally try to make it as easy as possible.
Oh, that makes sense. So, you know, the regulatory landscape is changing rapidly, right? This administration is really focused on deregulation, and also reducing the number of policies that exist. And then, as you mentioned, markets are changing, right? You're saying it's a soft market now. So, like with all of these three things in flux, like how is that changing the way that your company or cyber insurance are approaching coverage and reporting requirements? How is that impacting both of those things?
Yeah, so I think the best way to think about this is just the global regulatory environment when it comes to cybersecurity. And we have had as the US sort of pulls back, we have still had a very active global regulatory environment over the last few years. And broadly speaking, I think regulators are communicating something very clearly, and that's they expect that organizations are going to embrace and more proactively secure their businesses and be held accountable for the decisions that they make. And I would say there are two global trends that I think communicates this message clearly and also influences the questions that we ask and what we think about. The first is we're seeing an increase in obligations to report incidents. And I would say that they're strikingly similar worldwide in some ways, right? So regulatory authorities not only expect timely notification to regulators, they're also increasingly requiring information about how incidents are managed and contained, right? We see that with Australia's Cybersecurity Act. They have the SOCI critical infrastructure reforms. The UK just tabled legislation to update NIS, Europe's NIS2 directive. There's Canadian cybersecurity regulations, the list goes on, and they all have some striking similarities, like the 72-hour reporting window is the same. But I think that tells us that organizations need to be ready to meet these regulators' expectations, and they have to be ready over time to be scrutinized by regulators, because there could be fines for late disclosures, and they will likely become more common over time. The second thing that is not, I mean, I forgot the US, CERCIA is coming online later this year. I can't believe, which I know you worked.
They're going to publish a final rule. I actually haven't stayed up to date. I was going to ask you about that.
Yeah. So I think the expectation is it's still coming out. I don't, maybe Q2, Q3 of 2026. But yeah, I mean, the law will come online. I don't know where things are, but I know that they're working on it. That CISA is working on it. Just the second thing that I think is driven, like from the United States, is driven more organically in the market, and in Europe and elsewhere, it's driven more by regulations. But policymakers and even those in your business orbit now expect businesses to evaluate the cybersecurity of their suppliers. So NIS2 is a big one, and in the UK's like update to NIS, they've taken a more progressive approach or more proactive approach. Companies have to demonstrate that they've taken steps to secure not only their own networks, but you have to know something, undertake some due diligence on the cybersecurity across your suppliers. We're also seeing insurers, we're seeing this get reflected.
That question though, like that is so challenging, and especially if you're a small to medium-sized business. So are you guys providing tools to help with that, or in the suite of tools that you give them when they consider going with coalition?
Yeah, so there are all sorts of tools that are available to this. Many are commercial that do, third party, where you can do, where you can assess the risk of your third party suppliers. We provide some guidance on this, but what's really tough, all of my colleagues in this space that sell software for this are going to be very upset with me. But one of the challenges that you have is really you have to do your own homework, because a core question is like, a supplier is not a supplier is not a supplier, right? You can think about concentric circles. Like if a supplier that makes your business cards go down, like probably not a huge deal, but if the one that provides the one widget that's so important to the major export, like that's, so having to categorize your suppliers and knowing a little bit about their systems is really important. One way, there are two ways that we're seeing people do that. One, frankly, is if you have suppliers, businesses can ask questions like, do you have an active cyber insurance policy? Because the ability to secure and maintain one tells you something about that business's having met basic cyber hygiene requirements. Other ways that we're seeing this happen is just contractual provisions, right? Like expectations that you're my supplier, you're a critical supplier. That means I expect you to deploy MFA. You must have a managed detection and response service. You must carry some amount of like financial risk mitigation in case I'm harmed by a breach that you experience and things like that.
Got it. Well, if you could give CISOs, risk leaders, and executives just 2 priorities for 2026 to help reduce their losses and improve their insurability, what would it be?
Yeah. So the 2 things that I would focus on are not directly technology oriented. I would say the first thing is to assess your organization's culture and its incentive structures in light of security goals. And the second is to make sure that you're thinking about digital risk broadly and not just cyber risk. So on the first, culture shapes the choices that people make every single day. In organizations that value and reward learning from mistakes rather than assigning blame, right? Tend to respond more quickly when errors happen, and these errors are inevitable, like when you accidentally click a link and think you may have fallen for a phishing attempt. Culture is the difference in that moment between an employee doing nothing and hoping the email was benign and immediately reaching out to an InfoSec department and saying we may have a problem, right? And that can mean the difference between an incident and not. So culture is really important, and it's something that really deserves some attention. But it's not enough. As I said, you also have to look at your structural incentives to see how they align with your security goals. So cyber criminals are targeting help desks by exploiting human behavior, social engineering. And what's interesting about help desks, as we all know, is they are rated using metrics like speed and customer satisfaction. And attackers use these same goals against them, right? So when a threat actor calls in, both the threat actor and the help desk employee want that problem solved quickly. They want the person calling in to be happy, and it really creates the perfect opening for a criminal. We saw that in in 2024, one of the large scattered spider casino breaches. That's how they got in, basically by working with the help desk. It was like kind of helping them figure out how to get in. The second the second priority that I would flag is just broadening a risk perspective. And this gets back to what we talked about a few moments ago about how a national security expert's perspective on risk looks different from a business person's perspective. We just have to broaden our risk perspective. Digital risks go well beyond cyber threats. And one thing that I'll flag for this community, for those that are in the InfoSec space, you'll know, but we're seeing a dramatic increase in a specific kind of data privacy claim that we call wrongful collection. And these can be financially devastating. They can lead to regulatory fines and lawsuits. And so these are basically, we have a number of entities that are taking advantage of outdated privacy laws that offer a private right of action. They come with statutory awards, and you don't really need to prove harm or standing. So they're basically issuing demand letters, just trolling websites, issuing demand letters when something is not quite right with your privacy disclosure, for example, and making it's quite a cottage industry. But that's a big risk for businesses, because that's money you could spend on security or running your business if you experience one of those incidents. And maybe one last thing, because I feel like it's not a security related event unless we end on an AI note, but think about your potential risk from sophisticated AI driven scams. So setting aside the AI attacker versus defender conversation, think about, like, how vulnerable are you to a deep fake, for example? Like, how could someone use a deep fake to manipulate your employees or trick someone, trick a supplier, trick a vendor, and think about how you're going to defend yourself against those types of events.
Well, thanks so much. Thanks so much, Sezaneh, for sharing your insights with us. We had an insider's view into cyber insurance, and especially what's going on with ransomware, systemic risk, and how AI is impacting and both shaping, the threat environment, as well as how you are approaching underwriting. Thank you to everyone who attended. We hope this briefing helped clarify some of these trends that we're seeing in cyber coverage and risk transfer, and actions that your organization can take to help strengthen resilience in this changing market. And at ICIT, our mission is to help modernize, secure, and build resilience into critical infrastructure systems that we rely on. And we're hoping that you'll stay engaged and join us at our future briefings and to continue this conversation with our community. Thanks again, Sezaneh, and I look forward to seeing you, the audience, at another ICIT event.
Thanks so much, Val. It's been a privilege.